Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. So we are through central banking palooza, right? We had the BOJ out of the way, ECB out of the way, and today we had the Fed. To make a long story short, because you can read about everything she said, she came out very dovish and basically said that, risks are balanced and that the economy is doing a little bit better, but they're in no rush to raise rates. And it seems like they went with the dot count, to 2 more times potentially. And I guess we'll see, in June if the S&P is at 2,100, they'll probably, raise it a quarter. But if we're back down to 1950, we're probably just going to continue to muddle along. But either way, today's action in the overall market, was very specific and muted. It didn't give you any real clues that this trend off the lows is over. Same way it didn't give you some clues that, you should be massively buying things, that are up, 4 or 5 days in a row. So it's really the same trend. Stay the course with not many fireworks, and we'll figure out what happens tomorrow, because sometimes the following day is really when some type of trend, develops. So meaning we could stretch through this little consolidation that we've had, or we reverse today and then, we get a little bit of a pullback. So either way, let's just get to the charts. You go right here to the chart of the spiders. Ever since this double bottom here, where everyone's been ranting about how this isn't going to end well, the spiders have held the 8-day the majority of the time. Here was your first, big move that was more than short covering as soon as, some support came in here to support your moving averages. And then, it really took out this resistance, held it, and it's been going up ever since. And recently, we've been playing around the 200-day, and today you had your first up day after pretty much a 3-day rest. So we could continue higher if we want. For the day, it's kind of cute that, came within 2 pennies of filling the gap that we've been talking about that could get filled for ever since pretty much it was over here. Well, that happened. Okay, you're definitely bumping up against. Actually, you want to draw like that. There's lots of resistance coming in here, but at this point, nothing at this point is truly stopping the price. And so again, with this type of, you didn't get like a massive trade through 203, a massive buy capitulation stretch, come back below it and close on the lows. You just got another day in the life of the same type of thing that happened here. I've been trying to show you how this trend from your double bottom low that had a quick move up, that traded through resistance and wound up going through, holding the 8-day, wound up going for a little bit longer than everyone thought. And right here is when it took back the 200-day here, where came above, boom, and then you still had another, what is this, another 50 handles. I don't know if we have another 50 handles, this way, but again, it's not showing you really much of why you should be running for the hills. So, continue to look for opportunities. The IWM, granted a little weaker, but still, after the huge move that you've seen since, this little bottom pivot, it's still giving you some kind of flag type pattern. You can't really get overly bearish until this breaks. As of right now, it's still just hanging in there, consolidating, and maybe there's another move. Oil was strong today. The XLE was strong today. We talked about in the recap yesterday how, first of all, remember this Bible pivot, how it's been holding the 8-day, and every time it's come in here when people have been trying to short, it's been holding. That tells you it could go higher. And then here's your 200-day. As far as high beta tech, I came in long Facebook, Amazon, Apple, JP Morgan, like 5 names or so, and I don't leave with any of them. I sold my Apple north of 105. I sold my Facebook north of 111, and my Amazon not great. So at this point, I just kind of go with my own day count rules, where here is when it was calculated to buy Apple. Okay, when it broke above this, here was when it was calculated to buy Apple, even there, and now buying it into here. After multiple days, day 3, like I always say, I'm usually a seller, not a buyer. So if it goes up day 4, day 5, day 6, it does it without me. If it consolidates, and holds for a little bit again, maybe it flags, and then I feel more comfortable buying. But all in all, that's the way I go about it. So on day 3, I sell, and I, had it on this day, held it overnight, sold today. That's a 3-day move in Apple, and we'll see what's next. Facebook also had it yesterday, had it overnight, and now it's up. From here, almost 1, 2, 3, 4, 5, 6, 7 days. It cleared this spot, which was my little extra pivot buy, and now, yeah, it can get to the highs, but, for me, again, it gets a little bit extended from the 8-day. I don't like to be that heavily in. If you want to stay and trail it, God bless, it's for you. Amazon, same thing. I had it overnight, took a little while to go. still acting a bit lethargic. Sold off a little at the end of the day. I don't know, maybe those Google, Apple news, whatever. This I'd love to see go a little tighter, and then maybe we get a new buy above this spot. It's getting tight. I am in Netflix, even though it's the laggard out of all of them, because at least there's a pattern, and it's trying. Like here, it's getting tight. If we were to turn down, I would think Netflix hasn't gone yet. It's a laggard, maybe it turns down, but at least there's a setup here. So I wanted to have it on my radar. So I'm in a little bit of that, just in case it wants to go and get back to here, or maybe even higher. But at this point, there hasn't been any real big news. So we'll see what happens here next. This is on my radar that there's a trade here. It hasn't been very great. It hasn't been special, but maybe it gets better. Tesla, I think guys sold their longs if they still had it. I don't know what it did towards the end of the day. Still trending along above the 8-day, nothing to fight there. The banks were a little weaker. I actually had a good sale there where, when it was up, I got rid of it because I just didn't like the way it was acting. They were definitely dovish, which means that, interest rates probably not going up too quick, so the banks have a hard time making money, especially after what you saw at Deutsche Bank overseas, basically saying their business is horrendous, and look what happened there. So banks are just not special. Goldman Sachs, I tried buying a few times, and look how this is lagging. So I don't know if this is a precursor of lower prices everywhere or just stay away from these stocks, but they're still hanging around, but just not where the money is flowing. Money was flowing in names like X today. X I talked about, stay with it as long as it rides the 8-day. Well, here was your pullback to the 8-day, and then here was it again, and now it closed on highs. So I know it's been up a lot since taking out this pivot, but still trending. Definitely not a short yet. And as far as where can it go, remember, just so you guys know, this stock was $41 about a year ago, or a year or and a half ago. So here it is at 15. Just don't blindly short it. Give it some space. Same thing with FCX. The FCX, when new broken trends get going again, the way you stay with it is if it holds the 8-day or the 21-day. Some people give it even a bit more room. This FCX had a nice move, consolidated here, went again, and now it just consolidated again, and maybe it has some room to the 200-day. So these things, are in a bit more play, and guys on the VTF, I think, are trading it pretty well. The two disaster type stocks, VRX, didn't give you much action. I guess you could have used this little pivot here, but inside day, MNK. We talked about how if it trades below this engulfing bar, take care. Well, it did over in the first 30 minutes. It traded below this, went down $6-7, and it's trying to hold this area. It's still broken name, a lot of risk there. So, unless you would like a lot of risk, trade it overnight. For me, I think you should avoid it and just wait. And intraday, there's some moves, but I tried it today and got stopped out. GWPH, went in the gap and started to head a little bit lower. I think guys are trying to think about whether or not they could buy some options if it comes in a little bit further from 90 to today's low. Maybe tomorrow we get some kind of pivot off this, and here's when the moving averages start to catch up. So maybe in here you go out 3 to 6 months and buy some $80 to $90 calls if you think they get another approval on 2 or 3 more of their drugs. But always good to sell into a big gap up, and if you're looking for a short, this gap did not hold, so it's been a little bit pressured. So you'll see what's next. The IBBs still lagging, not special, below the moving averages. Don't just short the spiders because the IBB is lagging. That's not been a winning trade. Or don't just short still names because the bios are weak. So trade what you're trading, and that's it. All in all, this has been a weaker sector, and I don't know what it's going to take. This was your ascending channel. Here is when it looked as if it could try and get above a certain pivot, and now it's just in no man's land. Not the place to be for now. Maybe that changes. So all in all, today's action, well, it wasn't powerful. There were a few things to do. You came in along high beta tech, at least we were in Facebook and Apple. They were the good ones. Amazon was a good one too. Google was okay. They traded throughout the course of the day. Banks gave you a push from red to green. So if you saw them go red, maybe you could get out of the way or even got short. Spiders wasn't much action. It did get above 203, almost filled that gap by 2 cents. Came back down towards the end of the game, so keeping everyone guessing, but not a blaring sign that it's rally over. Same way, not a blaring sign that if something's up more than 3-4 days in a row where you should be, all in, maybe you have a trailer on or you get a little lighter, or just be in cash and play the ranges, look for the action, and you know, if you're a little uncomfortable buying a market after a 220 handle rally, but just as uncomfortable as you might be buying it, doesn't mean you could just short it, because guys have been doing that for 100 handles, and they're probably, you know, not feeling so good because they say, oh, we can only go up another 20 handles. I've been hearing that for 70 handles. But anyway, you know your pivots. We'll have the charts. We'll see what's in play. Keep putting together some P&L, and I'll see you tomorrow. Have a good night.